So guys, as dividend investors, we're not just looking for stocks that pay dividends. We want our stocks to also grow their dividends over time because the end game here is to build a stream of passive income that's constantly getting bigger and better. Now, the reality is, with most dividend stocks, you'll notice something over time. The dividend growth rate tends to slow down. And they might still be bumping up the dividend payments every year. The growth might still be there, but the pace tends to lose steam over time. But that's not the case with the 3 dividend stocks we're diving into today. These are not your average dividend payers. The dividend growth rate on these bad boys is actually speeding up. So much so that I'm calling these stocks dividend rockets. And in this video, we're going to break down these 3 stocks and take a look at how they're rewarding shareholders with dividends that just keep growing faster and faster. But before we get to those guys, I want to hear from you. Leave me a comment below and tell me about some of your favorite dividend growth stocks. I want to hear all about what you guys are liking out there, so let me know in the comments. So guys, the first stock on our list today is Novo Nordisk, which has been on an absolute tear lately. NBO is one of Europe's largest companies, and for decades it was mostly known for its diabetes treatments, but the real story lately has been obesity. This is the company behind drugs like Ozempic and Wegovy, which are now incredibly mainstream and have completely reshaped the company's growth trajectory, turning Novo Nordisk into a household name. Taking a look at Novo Nordisk over here on SnapStock, which you can start using for all of your stock analysis and research. There's a link to SnapStock in the description of the video. I hope you check it out. But here we can see that Novo Nordisk is an incredibly high quality company. Their Snap score is coming in really high at about a 9 out of 10. And if we look at the breakdown of the scores here from top to bottom, it's looking pretty impressive. Growth is perfect, 10 out of 10. Profitability is the same. Debt's not too shabby, 7.5 out of 10. Dividends and buybacks, we like to see this right here. And it looks like they're generating some really strong returns with a capital efficiency score of 7.6. Now, with that said, looking at the share price performance, things look pretty good over the last month. The stock is up a whopping 12%, so really strong performance actually. But if we look at the year to date, Novo Nordisk is still seeing quite the pullback. It's down almost 31% just here in 2025. And if we zoom out once more over the last year, the stock is down almost 50%. That's crazy. It's gone from about $120 per share from last October to now where it's at about $60 per share. At any rate, switching gears and looking at how this company has been growing, we can see the revenue growth has just been tremendous, especially from 2021 until today. It's gone from $140 billion in sales to a whopping $312 billion just in the last few years. That's crazy growth, and the averages are pretty insane too. Revenue's grown by about 23% over the last 5 years. With that, it looks like earnings per share is growing at a pretty similar rate. It's actually growing faster than revenue. So earnings per share has grown by about 26% over the last 5 years. And last but not least, the free cash flow per share is just looking perfect. This is just up and to the right. These last handful of years have been really good. And over the last 5 years, the average growth rate on the free cash flow was about 25%. So pretty similar to what we saw with the earnings per share. And this definitely bodes well for the dividend. Looking at how the company's been growing from top to bottom, it's really going to be no surprise that they're able to grow the dividend at such an aggressive rate. And then scrolling down, getting into the good stuff, looking at the dividend yield right here, this is coming in at about 2.4%, so pretty middle of the road dividend yield. And looking at this chart over here, this is why we are calling Novo Nordisk a dividend rocket. We can see that the dividend growth rate percentage year after year just keeps going up. In 2020, it was about 5.5%. We can see it's a bit higher the next year, and the next year, and the next year, and in 2024, they grew the dividend by almost 40% just in this 1 year. And what's interesting about this is as the dividend growth rate has sped up over the years, if we scroll down, we can actually see the earnings payout ratio and the free cash flow payout ratio have both been declining. Going back to 2016 or 2017, it looks like the payout ratio was sitting at about 50%, but it's really started to come down, and now it's kind of getting into the low 40s. So over this last handful of years, even though they're really ramping up that dividend, it's still not enough to keep up with the growth of the earnings and the free cash flow, which I think is a great problem to have and makes Novo Nordisk an undeniable dividend rocket that should deliver rock solid passive income for years to come. With that said, if you're in the market to add another passive income stream, then you're going to want to check out Limits Express Company, which is actually the sponsor of today's video. So earlier this year, I started selling products on Walmart through Walmart WFS. In a nutshell, that's Walmart's own service that lets you set up a storefront on their website, send inventory into their warehouses, and then they handle everything once a customer places an order. They store the products, package them, ship ship them the whole 9 yards. Now, the big question around all of this is, okay, well, how do you even know which products to sell, and where do you even get these products? I mean, how does all of this work? And that's the cool thing about how I've been running this. I've been working with Limits Express Company, who's managing the entire thing for me. Thanks to them, I don't have to lift a finger to run the store. It's completely passive and hands-off, and from the time I made my first sale in April until now, these are my results. As you can see, the returns aren't too shabby, and the only thing I had to do was put up the money for the inventory. Other than that, Limits Express takes care of everything else, from sourcing the products through their supplier network to shipping them to their own warehouse, where they repackage that with your store's information and then sending that inventory into Walmart, where Walmart then handles the fulfillment. Now, the cool thing about working with a company like Limits Express is that they're working with multiple clients and they're placing these really large orders in bulk, which means they're able to negotiate top-tier pricing on all of this inventory, which means better margins when you sell it on Walmart and ultimately a higher return on your invested capital. And just like how I document my dividend investing journey here on YouTube, they're documenting their Walmart business over on their channel. They share educational content about Walmart WFS and post regular updates showing how their clients are doing, which I think is really cool to see, and I'll include a link to their YouTube channel in the description and also in the pinned comment. So like I said, they're very transparent and their incentives are aligned with yours. They only make money when you make money, so they are just as motivated as you are to get good results. And so far, as you saw a moment ago, I've had great results working with them. With all of that said, if you're interested in learning more about generating passive income through Walmart WFS, just click the link in the description of the video or in the pinned comment, or just scan this QR code right here to set up a free 30-minute Zoom call with Kyle, who's one of the co-founders of Limits Express. If any of this sounds interesting to you, I genuinely think the best way to go about it is just to outsource it to the pros who live and breathe this stuff every day. So definitely set up a call and start building another passive income stream with Limits Express Company. Getting back to it, guys, Comfort Systems is a company that most investors probably have not heard of, but it's one of those really great hidden gems that I do think more people should know about. With that said, the business is definitely more on the boring side. They provide construction and building services, focusing on things like HVAC systems, plumbing, piping, electrical work, fire protection, basically all the stuff that makes a commercial or industrial building function the way that it's supposed to. Now, as of late, the company's mechanical segment has been the biggest driver of growth, and that's mainly because Comfort Systems has been riding one of the strongest tailwinds in the economy right now, which unsurprisingly is the AI and subsequently the data center boom. Every new data center needs massive amounts of cooling and electrical infrastructure, and Comfort Systems is one of the few companies out there that can handle projects at that scale. As a result, the profits for this company have absolutely exploded, as we'll see in just a moment, and clearly so has the share price. I mean, just in the last 30 days, it's up 19.3%, which is just an insane return in such a short amount of time. And even today, it's up another 3.5%. So something is really happening with Comfort Systems. But if we zoom out looking at the year to date, guys, it's way more impressive. Just here in 2025, the stock is up 98%, which is very unbelievable. And over the last year, it's up 106.5%. With that said, looking at the Snap score, we're also getting a pretty high score here for Comfort Systems, coming in at 7.9. And for the most part, these scores are pretty solid. Perfect growth, 10 out of 10. Really like to see that. Profitability is on the lower side at 3.9, which is no surprise considering this company's in construction. They're dealing with a lot of capital intensive stuff, so it's not too surprising to see that they might have lower margins than some other companies out there. But everything else is looking really good. Debt's 8 out of 10, dividends and buybacks looking good, capital efficiency, same thing. And scrolling down, looking at some of the growth stats, starting here with the revenue chart, this is picture perfect. This is exactly what you want to see. And based on this, it's no surprise that their growth got a perfect 10 out of 10. And the revenue CAGR here is just wild. They've grown their sales every year by about 25% on average. And if you thought the revenue was good, I mean, the earnings per share is definitely giving it a run for its money. This is another great looking chart, and the growth rate on the earnings per share is so wild. Over the last 5 years, the CAGR is about 37.4%. And unsurprisingly, the free cash flow growth has just been spectacular, not only over the 5-year period, but the 10-year as well. Actually, these CAGRs are pretty close together, both about 30%. And if we scroll down to the profitability section real quick, one thing I want to show you guys is this net profit margin, because it's pretty interesting. So like we saw earlier, they got a very low score for their profitability, very low margins, but this chart's actually looking pretty good. This is the net profit margin, and as we can see over the last decade, they're actually improving their profitability. So 10 years ago, the net profit margin was only 3%. So this is why they're getting such a low score, because the absolute number is low, but the trend is very nice. The net profit margin has gone from about 3% 10 years ago to more than double that actually in the most recent year, sitting at 7.4%. So Comfort Systems is getting more profitable over time while growing their sales, while growing their earnings. Not only is the company getting larger, but they're becoming more efficient with how they use their capital and how they spend their money, which certainly bodes well for the dividend. And on that note, looking at the dividend stats, I will say the one potential blemish with this company is the starting yield. It's incredibly low. In the trailing 12 months right now, it's 0.14%, so definitely nothing to write home about, but the 5-year dividend growth rate is pretty spectacular at about 30%. And this is why it gets that dividend rocket status from 2020 all the way to the most recent year. Look at how the dividend growth has sped up. In 2020, it was 7.5%, 2021, a bit higher at 13%, even higher in 2022, 16.6%, and then it really shoots up here in 2023, where they raised the dividend by about 52%, and in 2024, they issued another spectacular increase of 41%. So this is just really aggressive dividend growth. And scrolling down, looking here at the payout ratios, it's the same thing as what we saw with Novo Nordisk. Even though that dividend growth rate is really ramping up, the payout ratio is still getting lower and lower over time. Both looking at the earnings payout ratio and free cash flow payout ratio, the dividend coverage is increasing. Once again, it's a good problem to have. And from what I can see, the only maybe potential problems, I don't even know if they're problems, but the only things about Comfort Systems are, number one, the share price is incredibly high. It's really gone up there. And number two, as a result, the dividend yield has really come down. But let me know what you guys think. I'm curious to know, would you buy this stock right now, or do you think it's a bit expensive? Let me know in the comments. So Applied Materials is another one of those companies that many investors probably haven't heard of, but it plays a really important role in the semiconductor space. While they don't make the chips themselves, Applied Materials does make the machines that make the chips. And like Comfort Systems, Applied Materials has been a huge beneficiary of the AI boom. Every dollar being spent on AI infrastructure ultimately trickles down to companies like this, because AI development can't exist without advanced chips, and those chips can't exist without Applied Materials equipment. And unsurprisingly, the share price has been really solid. This is actually the best performance over the last month out of all of the three companies. It's up 33% just in the last 30 days. That's unreal. And if we zoom out looking at the year-to-date performance, actually all of its gains and then some have come just in the last month, because year-to-date it's up about 32%, and over the last year it's only up about 5.5%. So really, all of their returns over this last year have come just in the last month. Now, as far as the snap score goes, this one is the second highest of the day, coming in at 8.92, just below what we saw with Novo Nordisk actually. And from top to bottom, these scores are great. 9.4 for growth, 8.8 for profitability, 8 for debt, perfect dividends and buyback score, and 8.25 in the capital efficiency department. Now scrolling down, looking at the growth section, starting here with the revenue, really solid looking chart right here. The sales have just gone up and to the right, and it looks like both over the 5 and 10 year period, the revenue growth rate has been really solid, about 12%. With that, earnings per share has grown by almost double what we saw in the sales growth. Very good looking chart once again, but over the 5-year period, earnings per share has grown by about 22%, and it's actually a bit faster over the 10-year, growing by 25.4%. And then what's really awesome is that actually the free cash flow growth has been the most aggressive out of these three charts. Over the last 5 years, it's grown by 25%, while over the last 10 years, it's actually up over 31% on average, which, spoiler alert, is going to mean a pretty rapidly growing dividend. Now scrolling down, taking a look at that, starting here with the yield, we have another low starting yield at 0.7%, but we're getting that pretty hefty dividend growth to match about 15%, both over the 5 and 10-year period, and also very consistent dividend growth as well. And since 2020, every single year, the growth has been faster than the previous year. In 2020, we got a 4.4% raise. 2021 moved up to 7.2%. 2022, 8.8%. And then 2023, the dividend growth rate almost doubled compared to the previous year at 15.8%. And then finally in 2024, the increase was 24%. So that is really starting to reach that escape velocity. And scrolling down, looking at the payout ratios, pretty similar to what we saw saw with the last two companies, although it may not be as obvious, I would say. Since 2019, the payout ratio has definitely come down. Like 2019 to 2023, we do see a pretty steady decrease, but it starts to pick back up in 2024. Still, the payout ratio is in a great spot, only 16.6%. So that dividend yield is very well covered, and we see a similar trend here with the free cash flow payout ratio, but still, once again, looking great. So anyway, guys, I think all of these stocks look like perfect contenders if you're in the market for something with aggressive and growing dividend growth, but also if you're just looking for a generally high quality company. And in this next video right over here, I'm actually telling you about 3 more companies that I think are also almost perfect. Now, when I say almost perfect, this isn't just my opinion. This is based on their snap scores. These 3 companies have the highest snap scores that I could possibly find. They're just rock solid from top to bottom. So click right over here to check those out, and I'll see you in the next one.